Okay, so we're talking about these classifications of the assets, and I had already kind of, in the introduction, told you what those were. We've got ordinary income property, 1221 property, which is capital assets, so that would be on the Schedule D. 1231 trade or business property, that would show up on the Form 4797. All right, so ordinary income property, actually ordinary income property is pretty easy. This is just property that you sell in the course of your business. If you sell a piece of inventory, you're going to generate ordinary income, right? That's just in the course of business, correct? So ordinary income property is essentially not a capital asset. It's a short-term asset used in a trade or business, usually in the form of inventory, accounts receivable, or notes receivable. I want to talk a little bit about accounts receivable and notes receivable as with regard to selling them. So it is possible to sell these assets to another person. If you have accounts receivable, let's say you've got $100,000 of accounts receivable outstanding. There are companies out there that will buy it from you. They're not going to pay $100,000 for it. They're going to pay you a lot less than that, but maybe $30,000. And then they're going to be the ones to collect the $100,000. But when you sell those accounts receivable, that $30,000, if you had collected all of that money, you would have paid ordinary tax rates. It would have been considered ordinary income. It would have just shown up on your Schedule C, and it would have been included in all of your other income, right? So the fact that you're selling the accounts receivable instead of collecting on the accounts receivable doesn't change the character of how that income is reported, okay? So notes receivable are the same. So a note receivable would be, you sold something in the course of your business and you have a note as opposed to just, on credit sort of thing. So a formal note, again, if you collected on that note receivable, it would be considered ordinary income. So if you then sell that note receivable, it's still going to be considered ordinary income. So short-term assets used in a trade or business, and we're going to define short-term, it's a year or less, basically. So it is possible for these trade or business assets to move over to this ordinary income asset category if you held them for less than a year. So if you bought a piece of equipment for $10,000 today, October 15th, and then you end up selling it next April, you've held it for less than a year. When you sell it, that's generating ordinary income because it's less than a year. So it kind of moves over to this ordinary income asset category. Next category, capital assets. Any asset held for investment. Stocks, bonds, securities, land, investments come in all different shapes and sizes. Cryptocurrency, all that kind of stuff. Also, any personal use property. So anything that is yours personally is considered a capital asset. Your personal car, your personal home, your personal anything. Not inventory. It's never going to be inventory, capital assets. It's never going to be depreciable trade or business property. So if you depreciated it, it's not a capital asset, okay? Not a copyright, not an accounts receivable, and not a notes receivable. Essentially, investments and personal use property are capital assets. 1231 trade or business property. These are long-term depreciable trade or business property. So that piece of equipment that we bought today and we sold it in April, now instead we bought it today and we sold it next December. That's more than a year. That's now considered to be a long-term depreciable trade or business property. So that's simply because we held it longer. Now it's considered a 1231 asset. Long-term land used in the trade or business. The difference between these two items is depreciable, and obviously land is not depreciable, right? It's not short-term trade or business property, not inventory, and not a copyright. Okay, So business property, land, real estate, any type of business property has been held for more than 1 year, okay, is 1231 trade or business property. Short term, if it's held for less than 1 year, it's gonna be considered ordinary income property, even if it's a piece of business property, okay? Questions about this? I find this table really handy, by the way, to kind of keep it straight. So some definitions here, again, inventory, property held mainly for sale to customers, or property that will physically become part of merchandise for sale to customers. Obviously, if we sell inventory, it's just in the course of business, right? Receivables, accounts or notes receivable acquired in the ordinary course of business or from the sale of any inventory properties. So usually that inventory is going to go under our cost of goods sold, right? If we actually sell it, it's going to be part of our cost of goods sold. It's going to be subject to ordinary income on our Schedule C, which is going to get mixed in with all of that stuff. Collection of an account or note receivable, again, is considered ordinary income for that cash basis taxpayer when it's collected. Neither selling inventory nor collecting accounts or notes receivable requires reporting on Form 4797 or Schedule D. You're just going to report it on the Schedule C when it's in the normal course of business. Now, there are some exceptions when you sell it, like if you sell a bunch of inventory, not because you're selling it to customers, but because you're selling it, say you've got a bunch of, you're a clothing retailer and you've got a bunch of old, styles from a year ago or something, and you decide to sell it at a discount in bulk to somebody else. That's a little bit different story. That's going to be reported on a 4797. It's still going to be ordinary income though, okay? But it's not going to show up on the Schedule C because it wasn't in the course of business, the regular course of business. All right, 1221 property. These are capital assets. Some examples here, home owned and occupied by the taxpayer and the taxpayer's family. Your personal home is considered capital property. There are some special rules with regard to your personal home though. In selling the personal home, there is a certain amount of gain that's excluded if you meet certain requirements. So the home itself has some special rules. Timber grown on your home property or investment property, even if the taxpayer makes only casual sales of the timber. So if you're selling like fireplace wood and that sort of thing. Household furnishings, a car used for pleasure or commuting, coin or stamp collections, gold, silver, and other metals. These are just some examples of capital assets. Mostly what we think of with capital assets and investments is stocks and bonds, securities, that sort of thing, right? We're not, because we're buying it with the intent of making money off of it being an investment. Nobody just buys stocks for the fun of it. They buy it because they think they're going to make money off of it, right? It's a future investment. Capital asset really, as far as the IRC is concerned, is more defined by what it isn't. It's not any assets held mainly for sale to customers. It's not property used in a trade or business subject to depreciation. It's not a copyright, not accounts or notes receivable acquired in the ordinary course of business. It could be accounts receivable though if the business purchased somebody else's accounts receivable with the intent of then reselling them and making a profit off of it. Like, Amber's got $50,000 of accounts receivable on her books. She sells them to me for $20,000. I buy them, but I buy them not to collect it. I buy them in order to then sell them to Drew for $30,000, right? So now I'm doing it as an investment to make money off of it. So again, it has to do with your intent, really, not what the asset actually is. supplies used or consumed by the taxpayer in the ordinary course of trade or business as well is not. So here's an example, how land, typical tax answer, it depends, is land a capital asset? Land held for investment is a capital asset. Land used in a trade or business is not a capital asset, but it's a 1231 asset. Land held for resale by a real estate developer is inventory. So here's where land could be any one of those three types of assets. Okay. Musical compositions and copyrights in musical works are generally not capital assets. There are some exceptions to that. Also, it depends, like artistic works, they talk about here, artistic works in the hands of the artist. Like if I'm an artist and I do paintings. When I sell a painting, that's ordinary income to me. The person who purchases it though, it's an investment for them. And so then it becomes a capital asset. So that very same asset could change its classification based on whose hands it's in. And again, what the intent is of the seller. But for me, I created it. When I sell it, it's going to generate ordinary income on my Schedule C, right? Here's an example. Jacques, world-renowned artist, painted a lovely new work. He gave the painting to a close friend as a gift. So this is about the basis of how you determine what the basis is of these. So artistic works are not capital assets in the hands of the taxpayer who created them. But any artistic work purchased is a capital asset in the hands of the purchaser. Artistic works, copyrights, letters, publications, if the basis is determined by reference to the basis of the property in the hands of the creator, then the property is not a capital asset. So we've got Jacques, artist, painted a piece, gave the painting to a close friend as a gift. The property is a gift. So the friend's basis is the friend is going to carry over the basis that Jacques had. Because it's a gift, the basis to Jacques is probably almost zero. It's just the cost of the canvas and the paint and that. For Jacques, and also the painting is not a capital asset to the friend and would be treated as ordinary income property when they sell it. If it's a gift, that's the difference. Because it was a gift, it retains its character as the type of asset that it is, and it retains the basis because it was a gift. Does that make sense? I see some nods, I see some confused faces. So the fact that it was a gift changes it, okay? If it was sold, then it becomes a capital asset to the purchaser. Ordinary income to the seller of the person who created the work, but now it's a capital asset to the purchaser. If it's a gift, however, it is going to retain its same character to the recipient as it had to the donor, essentially. So to the recipient now, because it was a gift, they're going to get the same basis that the artist had, and it's going to be seen as a ordinary income property. Okay. All right, so that's capital assets. Now, trade or business property, 1231 assets. This is depreciable or non-depreciable property, land. So remember in that chart, it said depreciable and then it said land. Used in a trade or business and held for more than 1 year. Okay, so 1231 has to be used in a trade or business, has to be held for more than 1 year. If it's held for less than 1 year, it's ordinary asset property. Okay, land purchased and held for investment is a capital asset under 1221. So even if it was purchased through the business, again, doesn't matter about the land part, it matters about the investment part. That's what helps to determine it. Most typical examples, machinery and equipment, buildings, and land. If a business asset is disposed of within 1 year, it is treated as a short-term asset. And we're going to go through what that difference is. It has to do with the tax rates. If it's a short-term asset and it's sold at a gain, the tax rate is higher. It's going to be the ordinary tax rates. The brackets that we talked about back in chapter 1 are what's going to be used. If it's held for more than 1 year, the tax rates change. Okay. So 1231 assets do not include property that is considered inventory or artistic work. So here we've got Vlad, a sole proprietor, purchased a 3-acre lot for $55,000. He constructed a building for the business on a portion of the land, used the rest of the land for customer parking. The land, building, and pavement are considered 1231 property, as long as he held them for more than 1 year. Right. Let's see. Do they have the 4797 somewhere? Let me